Hello, folks, and thank you for joining us for today's weekly Wednesday webinar, our 5-minute brainstorm where we get together every week and talk about a new topic, a hot topic that's particularly relevant to seniors and their families as they're considering how to plan for and make a well-balanced retirement a reality. Today's topic, and I thank you so much for joining us today, is tax tips for seniors. So let's be clear, there's unique tax challenges, but also advantages for people once they turn the age of 65. There are a number of factors that will impact taxes based on age, health, their earned or unearned income, and how they manage their retirement accounts once they pass the age of 65 and start to cross a number of age-based and health-based thresholds. Disadvantages that some seniors aren't counting on that they should be aware of is one, it's possible that based on their income, they could end up owing taxes on their Social Security benefits. Up to 85% of their Social Security benefits can be exposed to taxation based on their income. Also, if they're working but collecting Medicare, they're still going to be paying a Medicare payroll tax. So just because you've crossed over to the point where you're starting to take advantage of entitlements doesn't mean that there aren't tax considerations that have to be taken into account. But there are a number of advantages that seniors can also take to help offset those tax considerations. As they age, there'll be changes in their tax brackets and where they fall for standardized deductions. There's also a number of unique itemized deductions and exemptions that will be available to them based on age, health, and those other factors. And what I'm going to do is go through a number of those over the course of the next few minutes. Starting with tip one, don't forget Medicare premiums are deductible if you're working self-employed. IRA account will cost 20% in withholding tax, but you'll avoid it if it's directly rolled over into a rollover IRA account. Tip number three, don't forget now, investment income, dividends, interest, capital gains are now all taxed at 15% and are exempt from Social Security or Medicare taxes. So your money, once you cross the threshold of 65, just became worth more. Also, when it comes to the sale of a home, which is the most common way that so many people will fund their retirement and potentially their long-term care expenses, the first $250,000 realized from the sale of a home for an individual or $500,000 for a couple are going to be tax exempt. So a good chunk of change will not be subject to taxation for the sale of a primary residence. You'll also be able to deduct medical expenses if they exceed 7.5% of the gross adjusted income of the individual. Also, gifting is a smart tax strategy, particularly for estate tax planning. An individual can gift to family members $15,000 a year, or a couple can gift $30,000 a year to family members, and then that money becomes exempt from estate taxes later in the future. The health coverage tax credit's been extended in 2021, which will provide a tax credit for health insurance premiums paid for seniors. Don't forget also a couple of exemptions. Funds received from a loan or a reverse mortgage are tax exempt. You're not going to pay taxes on the funds that are drawn down from a home equity line of credit, a reverse mortgage, and other types of loans that potentially could be used to offset income and potentially long-term care needs. Also, The funds received from pension and benefit payments for a veteran, such as the VA aid and attendance benefit, are also tax exempt. And then don't forget, when it comes to a life settlement, if somebody's going to sell off a life insurance policy, those funds, if they've been diagnosed as chronic or terminal in their health condition, are tax exempt. And anything received via a life settlement is tax exempt at or below what they've paid in premiums into the policy, their basis in the policy, over the life of owning that policy. So another example of how life settlements are particularly financially advantageous for people based on uh, their age and their declining health. So it's important to remember that these tax exposures and then the strategies to leverage to offset those tax exposures really derives what your net income is going to be as a senior. And some seniors make the mistake of budgeting and making life decisions on gross uh, income estimates versus the true accurate net numbers. So understanding these tax exposures and how to use the unique deductions and exemptions available to seniors is the key to helping to derive a well every week on Wednesday, 3 o'clock Eastern time.